Hey everyone, welcome to today's deep dive.
Yeah.
We're going deep on credit repair, and
Oh, yeah.
I think this is something that a lot of people feel like is kind of a mystery.
Absolutely.
It can be so confusing.
Can be.
But we've got some awesome sources here
Yeah.
that reveal some tricks that even the pros use.
Mm-hmm.
And this is not your typical credit repair 101 stuff.
Right.
We are going to be talking about things like lesser-known credit reporting agencies,
Absolutely.
strategies for actually getting negative entries removed from your credit reports,
Yeah.
stuff that a lot of people don't even realize is possible.
So what's really interesting is that most people think of credit repair as disputing everything on their credit reports from the big three,
Right.
Experian, Equifax, and TransUnion.
The ones everybody knows.
Right, exactly. And it's way more complex than that.
Right. It's like there's this whole hidden credit universe
The hidden credit universe.
that we need to uncover.
Absolutely. And you've got sources like Innovis Clarity Services check systems.
Mm-hmm.
Even title reports can have information that affects your creditworthiness.
Okay, so Innovis, what's the deal with that one?
So Innovis is actually owned by TransUnion, so they share data. But then you've got Clarity Services, which focuses specifically on people that have had some credit issues in the past.
So it's like they're watching those folks a little more closely, huh?
A little more closely.
That's interesting. What about check systems? I've heard of that one, but never really understood what it was.
So check systems is all about your banking history, not necessarily your credit history.
Okay.
They bounce checks, overdrafts, those kinds of things can land you in some trouble with check systems.
And get this title, reports the kind that they use for mortgages can reveal some pretty surprising stuff. Imagine finding out about an unreported foreclosure
Yeah.
or a limp from a contractor that you didn't even know about.
Absolutely.
That's why getting a clean sweep of all these sources is so important.
Exactly. It's like due diligence for your financial history. And something that really surprised me while going through these sources is the impact of seemingly small errors in your personal information.
Like a misspelled name or a wrong address.
Yes, there's this story about Christina Forhorn, who was actually arrested because of a name misspelling.
Oh, wow.
And then there's Dakota Ward, who also had some legal troubles because of a name misspelling.
That's crazy. So I guess those little details really do matter.
Absolutely. And it's not just legal issues.
Yeah.
Mismatched information can actually lead to what they call merged credit or mixed credit, where your information gets tangled up with someone else's.
So you could be denied a loan or even a job because of somebody else's bad credit.
That's a real risk.
That's scary.
So that's why you've got to be incredibly meticulous about the accuracy of your personal information on every single application.
Yeah. One of our sources, credit repair expert Neil Yeagley, has a great tip for this. He says sending multiple forms of ID with your dispute letters significantly increases your success rate.
Yeah, it removes any doubt about your identity, which can be a major roadblock in the process. Now let's dive into late payments on open accounts. There's a lot of nuance here that most people don't realize.
Yeah, it's not just about disputing every late payment you see.
Right, our sources outline a few different scenarios.
Hmm.
So for example, let's say you have perfect credit with one isolated late payment.
Okay.
That's handled very differently than someone with a cluster of late payments around a specific time, maybe due to a job loss or medical issues.
Okay.
And then there are cases of scattered late payments with no clear reason.
So each situation needs a different strategy.
Absolutely. And these sources actually provide letter templates tailored to each specific scenario.
Okay.
What's crucial is understanding the story behind the late payments and presenting a clear and documented case.
Speaking of stories, one of the sources had this example of a mortgage client who got hit with a late payment because of a student loan servicer error.
Even with automatic payments, errors happen,
Wow.
and they can have a huge impact.
Right, it highlights the importance of staying vigilant. Now I'm curious about this secret weapon that I keep seeing in our sources.
Okay.
Date errors.
Date errors.
That's what all the credit repair professionals are using.
It's all about finding discrepancies in the dates reported by the different credit bureaus, and you'd be surprised how often these inconsistencies occur.
So I should compare the dates of late payments on my Experian, Equifax, and TransUnion reports.
Exactly. And think about it. An account can't be both late and on time in the same month, right?
Great, that's true.
So if you find errors, you can challenge them.
Okay.
And it might lead to the deletion of those late payments altogether. And you never know what hidden opportunities you might uncover just by comparing those dates.
Wow.
Now, I know we need to talk about charge-offs and collections,
Yeah.
but those can feel a little intimidating.
They're like the big scary monsters of credit report.
They can be, but understanding them can really help you take control.
Okay.
So let's start with some basic definitions. A charge-off is when a creditor essentially gives up on collecting a debt, usually after 6 months of non-payment.
So they just write it off as a loss, but you still legally owe the money?
Exactly.
It doesn't just disappear?
It doesn't just disappear, and then you have a collection account.
Okay.
A collection account is a debt that has gone into default, meaning it's seriously past due
Right.
and has been handed over to a collection agency.
And here's where it gets tricky. Our sources say that a charge-off can actually become a collection.
Exactly. So you could have 2 negative entries for the same debt.
Oh, no.
And it gets even worse. Sometimes a collection gets sold from one agency to another, leading to multiple negative entries for the same debt.
Okay, so how do we even begin to navigate this maze?
So the sources lay out 5 key questions to ask yourself when dealing with charge-offs and collections.
Okay, hit me with question number 1.
What is the date of first delinquency?
Okay.
This helps you figure out how much time is left before the account falls off. Your report? Remember, negative entries generally have a shelf life of 7 years.
Got it. Question number 2.
What's the balance owed? This is going to be a big factor in your negotiation strategy.
Okay, makes sense. What's the third question?
Has the account been sold or transferred to a third-party collector? You need to know who you're actually dealing with.
So you're not sending letters to the wrong place. Question number 4.
Why did the account go delinquent in the first place? Was it a job loss, a medical emergency, or just irresponsible spending? Understanding the circumstances can be really helpful when you're crafting your dispute letters and negotiating settlements.
Okay, that makes a lot of sense. And finally, question number 5.
Are there any factual errors or discrepancies on the credit report for this account? Because remember, inaccuracies can be your ticket to getting that negative entry deleted.
So these 5 questions are like a roadmap for dealing with charge-offs and collections.
Exactly. They help you formulate a strategy that's tailored to your specific situation. And speaking of strategy, our sources provide some great real-life examples of successful deletion tactics.
Oh, I love those.
Tell me about one.
There's this case where a collection was deleted because the credit report listed a balance even though the debt had actually been sold to a collection agency.
So it was like a reporting error.
Exactly.
Okay.
And by pointing that out, they were able to get the entire collection removed.
Wow, that's amazing. It shows that those little details can make a huge difference.
They absolutely can. And remember, persistence is key. The pros often have to send multiple rounds of letters and make several phone calls to achieve their goals. So don't get discouraged if your first attempt doesn't succeed.
Great advice. Now I'm ready for a change of pace. Let's talk about something more positive, building excellent credit. Our sources lay out 8 essential steps for achieving just that.
So step 1 is establishing at least 3 positive trade lines. These are accounts that show you're using credit responsibly, things like credit cards or loans that are paid on time.
Okay, got it. So showing a track record of good credit behavior. What's step 2?
Consider a secured credit card. If you're having trouble getting approved for a traditional card, it's a great way to build credit from scratch.
Okay, secured cards, good option for those starting out. Step 3.
Avoid subprime auto loans at all costs.
Okay.
They might seem tempting, but the high interest rates and predatory terms can really trap you in a cycle of debt.
Yeah, those can be dangerous. What's step 4?
Never ever co-sign for anyone no matter how much they beg you.
Oh, yeah.
Their financial mistakes can become your burden dragging down your credit score.
That's good advice. I've seen that happen way too often. All right, step 5.
Keep your credit card balances low, ideally below 30% of your credit limit.
That's the golden rule, right?
Okay.
What's next?
Pay your balances in full each month. Avoid those interest charges and show lenders that you're not living beyond your means.
Solid advice. Step 7.
Be mindful of credit inquiries. Every time you apply for credit, it can temporarily lower your score. So be strategic about when and where you apply.
Makes sense. And finally, step 8.
Maintain insurance and an emergency fund.
Okay.
This helps you avoid relying on credit cards when those unexpected expenses come up.
Okay, those are 8 really solid steps for building and maintaining great credit.
Absolutely. And remember, credit repair and credit building are ongoing processes.
Yeah,
They take time, effort, and a bit of know-how, but you can definitely achieve your goals.
I love that positive note.
Yeah,
Now, are you ready to uncover even more strategies in part 2?
absolutely. We've got some fascinating techniques and real-life examples coming up.
Awesome, can't wait. Welcome back to our credit repair deep dive. We still got a lot more to uncover from this stack of sources.
Yeah, and we're moving into some strategies that I think people often misunderstand, like goodwill letters.
Goodwill letters,
Yeah.
yeah. I've always wondered about those. It's like that classic, please have mercy on my credit score plea, right? Yeah.
Exactly. Goodwill letters. They're tricky, They
Yeah.
can work, but they can also backfire.
So when do they actually work?
Our sources suggest they're most effective when there's a genuinely compelling reason for the late payment, and you can prove it.
Hmm.
Remember that mortgage client we mentioned who got dinged because of a student loan servicer error?
Oh, yeah, that was a rough one.
A well-written goodwill letter paired with documentation could have been really powerful in a situation like that.
But what about those risks you mentioned?
Well, first of all, a goodwill letter acknowledges that you did in fact pay late.
Okay.
So if they deny your request, that late payment is going to stick around on your report.
Ouch, not ideal.
And here's the second risk. Instead of just deleting the late payment, the creditor might delete the entire account.
Wait, seriously, why would they do that?
Some companies have policies that prevent them from removing accurate negative information, even if it's just one late payment.
Oh, wow.
So they might see deleting the whole account as the only option.
But wouldn't that actually hurt your credit score by reducing your available credit?
Exactly. It's a classic example of good intentions gone wrong.
Right.
That's why it's crucial to really weigh the potential benefits and risks before sending a goodwill letter.
Okay, so goodwill letters, a little bit of a gamble. What about courtesy letters? I saw that term in one of the sources.
So think of a courtesy letter as a more strategic, less emotional version of a goodwill letter.
Interesting. So how does that work?
Instead of pleading, you're presenting a factual explanation for the late payment, and you're really highlighting your overall positive credit history.
Like, hey, look at my track record. I'm usually on top of things. This was a one-time mistake.
Exactly. And being concise and professional is key. No whining allowed.
I can see how that would be more effective.
Yeah.
In what situations are courtesy letters most useful?
They tend to work best for isolated late payments, especially if you have a long history of on-time payments and keep your balances low. And here's a pro tip from the sources. If you can find the name of a specific person at the credit card company, address the letter directly to them.
So no more generic to whom it may concern letters.
Right. It shows that you're serious, and it helps your letter stand out from the pile.
Now, I've heard some people say that you should dispute late payments over the phone.
Yeah.
What do you think about that strategy?
It can be effective, but it definitely requires a certain personality type.
Yeah, I can see how that could get heated pretty quickly.
Exactly.
I see.
So if you tend to lose your cool easily, phone disputes might not be for you. But for those who are comfortable on the phone, it allows for that real-time dialogue and can speed things up.
It's all about finding the approach that works best for you, right?
Absolutely. And remember, even on the phone, documentation is your best friend. Have everything ready. Account information, payment history,
Yeah.
any supporting evidence you need.
Now, I want to circle back to check systems. We touched on it earlier.
Yeah.
But it's one of those things that I think a lot of people just don't know about.
It's so important. It's all about your banking history. And a negative check systems report can have a surprisingly huge impact on your life.
So not credit cards or loans, but checking accounts and debit cards.
Exactly. Bounced checks, overdrafts, even unpaid bank fees. Check systems keeps track of it all.
It's like the credit report for your checking account.
You could say that. And a bad check systems report can make it really hard to open a new checking account or even affect your chances of getting certain jobs.
Wait, really? Jobs too?
Yes, especially in fields related to finance. Some employers actually use check systems to assess financial responsibility.
Wow. I had no idea it was that powerful.
It can be.
So let's say someone's had some trouble with their banking history. What can they do to improve their check systems report?
The sources really emphasize understanding your bank's policies, especially about overdraft protection and fees.
Right.
Those fees can add up quickly and lead to a negative entry.
It's like those hidden charges that always seem to sneak up on you.
Exactly. Read the fine print, know your account balance, and set up alerts for low funds.
Okay, those are some great practical tips.
Yeah.
And if someone does find errors on their check systems report, what's the process for disputing them?
It's very similar to disputing credit report errors. You can file a dispute directly with check systems and make sure to include any supporting documentation you have.
Persistence is key here, right?
Absolutely. Don't give up if the first attempt isn't successful.
Now let's talk about something that can be a real nightmare: auto repossession. This one hits close to home for a lot of people.
Yeah, it's a really tough situation. And the sources actually tell a story about Gina, a single mother who had her car repossessed after facing some financial hardship due to a medical crisis.
That's heartbreaking. It's scary how fast things can spiral out of control.
And in Gina's case, the lender actually didn't follow the rules when they repossessed her car.
Seriously, what kind of violations happen during auto repossessions?
Well, for starters, creditors can't contact you at work or harass you in any way.
Okay.
And they're supposed to notify you before they repossess the car and give you a chance to reclaim it.
So they can't just show up in the middle of the night and tow it away?
Not legally, no. But unfortunately, as we see in Gina's case, these violations do happen.
So what can you do if your car's been illegally repossessed?
First, gather all your documentation, loan agreement, repossession notices, proof of payment, anything and everything.
Documentation is like your shield and sword in these situations.
Exactly. Then you have a few options. You can try contacting the lender directly to negotiate. You can file a complaint with the Consumer Financial Protection Bureau or even seek legal advice from a consumer attorney.
And I imagine acting quickly is crucial.
Absolutely. The longer you wait, the harder it might be to get your car back or recover any financial losses.
Well, let's say the repossession was legal, but you're still dealing with the aftermath.
Right.
What are some ways to minimize the damage to your credit and your finances?
One suggestion from the sources is to check the statute of limitations for collecting on a debt in your state.
Right, because that can vary quite a bit.
Exactly. If the debt is past the statute of limitations, the lender can't legally sue you to collect.
But it doesn't mean the debt just vanishes, right?
Fortunately, no. It could still stay on your credit report for up to 7 years.
So you might not legally have to pay, but it could still affect your ability to get loans or credit cards.
That's why it's important to weigh your options carefully. If you can afford to settle the debt and get it removed from your report, that might be the best path, especially if you're planning on applying for a mortgage or other loans soon.
Okay, that makes sense. But if you're facing real financial hardship and the debt is past the statute of limitations, you might just let it age off your report naturally.
It's all about finding the solution that makes the most sense for your individual circumstances.
Okay.
Now let's talk about another credit report. Troublemaker judgments.
Judgments, those sound serious.
A judgment is a court order requiring you to pay a debt.
So it's like a legal system saying you owe this money and you have to pay up.
Exactly. Judgments can come from unpaid credit card bills, medical expenses, personal loans, all sorts of things.
So how do judgments actually end up on your credit report?
So creditors can report judgments to the credit bureaus, and then they become part of your credit history.
And that can have some serious consequences, I imagine.
Absolutely. Lower credit score, difficulty getting loans or credit cards. It can even affect your job prospect. Yeah.
Okay, so let's say you find a judgment on your credit report. What should you do?
The sources really emphasize verifying the accuracy of the judgment. Mistakes happen, so make sure it's actually yours, that the amount is correct, and that it hasn't already been paid.
Right, because you don't want to be fighting a battle you've already won.
Exactly. If you do find errors, dispute them with both the credit bureau and the creditor who filed the judgment.
Okay.
Now, if the judgment is accurate and you haven't paid it, the best thing to do is contact the creditor and try to negotiate a settlement.
Okay.
Even if you can't pay the full amount right away, they might be willing to work with you on a payment plan or reduce lump sum.
Okay.
And always get any settlement agreement in writing.
Right.
Verbal agreements can be very difficult to enforce.
So true. Now, I saw in the sources that sometimes judgments are filed without proper notice. Is that even legal?
It's not. Creditors are required to serve you with a notice of the lawsuit before they can get a judgment.
Yeah.
But it happens more often than you'd think.
Wow, that's outrageous. What should you do if you discover a judgment on your report that you were never notified about?
The sources really recommend contacting a consumer protection attorney right away.
Okay.
You're fighting for your legal rights at that point. An attorney can help you challenge the validity of the judgment and potentially get it vacated.
That's a good reminder that sometimes you need professional help to navigate these complex legal situations.
Absolutely. Now let's circle back to those two big bad wolves of credit reports, charge-offs and collections.
Okay, we talked about them earlier, but I'm ready to really dig in and learn how to deal with them.
Okay, so let's break down the differences. Again, a charge-off is when a creditor, usually after 6 months or more of non-payment, decides to write off the debt as a loss.
So they're basically giving up on collecting it, but you still owe the money.
Exactly.
Okay.
A collection account is a debt that's been turned over to a third-party collection agency.
So it's like the original creditor has passed the baton to a professional debt collector, and those guys have a reputation for being relentless.
That's putting it mildly. And remember, a charge-off can actually turn into a collection account.
Wait, so you could end up with 2 negative entries on your credit report for the same debt?
That's right. And it can even get worse. A collection account can be sold from one agency to another, leading to multiple negative entries for the same debt.
Okay, that's just adding insult to injury. So how do we deal with these charge-offs and collections?
The sources actually lay out a 5-step strategy used by the credit repair professionals.
Okay, I'm ready to take notes. Step 1.
Figure out the age of the account. Remember, charge-offs and collections can only stay on your report for 7 years from the date of first delinquency.
So if it's an old debt that's close to falling off, you might just choose to let it go.
Exactly. No need to stir up trouble if it's going to resolve itself naturally.
Yeah, it makes sense. Step 2.
Check the balance. Odes, this will help you figure out your negotiation strategy.
Got it. Step 3.
Identify the current owner of the debt. Is it the original creditor or a collection agency? This determines who you need to contact.
Right, because you don't want to be wasting your time sending letters to the wrong place. Okay, step 4.
Understand the reason for the delinquency. Was it a legitimate hardship or just irresponsible spending? This context can be helpful when you're negotiating a settlement.
Makes sense. And finally, step 5.
Look for any factual errors or discrepancies in the reporting. Those inaccuracies can be your ticket to getting the negative entry deleted.
So those 5 steps are like a roadmap for tackling charge-offs and collections.
Exactly. They help you create a strategy that's specific to your situation.
Okay.
Now let's get into some techniques for actually negotiating with collection agencies.
Ooh, this is where things get real.
The sources really emphasize being polite but firm.
So no yelling or threatening lawsuits?
Right. That's not going to get you anywhere. Always be respectful but stand your ground.
And document everything, right?
Absolutely.
So,
Keep records of all communication, phone calls, emails, letters. It's crucial to have a paper trail.
now, what about the pay-for-delete strategy? I've heard that term thrown around.
So that's where you offer to pay a settled amount in exchange for the collection agency deleting the account from your credit report.
Sounds like a win-win.
It can be, but there are some things to keep in mind.
Okay.
First, not all collection agencies are willing to do it.
So it's worth trying, but don't get your hopes up too high.
Right. Second, even if they agree, get it in writing verbal agreements can be very difficult to enforce.
Good point. And is it true that paying off a collection can actually hurt your credit score in the short term?
It can. Paying off the debt updates the date of last activity on the account, which can make it look more recent to credit scoring models.
So it's like a short-term hit for a long-term gain.
Exactly. You're improving your credit history overall, but it might take a temporary dip in your score.
Okay.
Now, I want to address something that's often portrayed as this kind of secret weapon in credit repair.
Okay.
Metro 2 codes.
Ooh, Metro 2 codes. That sounds intriguing. What's the deal with those?
Okay, so it's important to understand what they are and what they're not. Metro 2 is basically a communication system used by credit bureaus and data furnishers, like lenders and collection agencies.
So it's how they share information about your credit history.
Exactly. Metro 2 codes simply identify the type of dispute being filed.
So there's a code for I'm disputing this late payment, and there's a code for this account isn't mine.
Right now, some people claim that using certain Metro 2 codes can trigger this secret process that bypasses normal procedures.
Okay, that sounds a little too good to be true.
It is. The sources really debunk this myth. Metro 2 codes are just for categorizing disputes.
Okay.
They don't give you any special powers or shortcuts.
So why do some credit repair companies hype them up so much?
It's often a marketing tactic to make them seem like they have some secret insider knowledge.
Right. Okay, so Metro 2 codes are real, but not a magic bullet.
Exactly. The real keys to success are clear dispute letters, documentation, and understanding the nuances of credit reporting.
Got it.
Now, I know you mentioned hearing about the infamous 609 letter.
Yeah, I've seen it mentioned online, but I could never figure out what it was all about. Is it a real thing?
It is, but it's often misunderstood.
Okay.
The 609 letter is basically a dispute letter that cites Section 609 of the Fair Credit Reporting Act.
Okay, and what does that section actually say?
It outlines your right to request a free copy of your credit report from each of the 3 major credit bureaus.
Okay, that makes sense, but how does that translate into deleting negative entries?
That's where things get a little fuzzy.
Okay.
The 609 letter typically demands that the bureaus prove they've complied with Section 609.
So it's like saying, show me the receipts that you actually sent me my free credit report.
Right, and the theory is that if the credit bureaus can't provide that proof, they'll have to delete any disputed items.
It sounds like a loophole.
It does, but the problem is the 609 letter often misinterprets the law. The Fair Credit Reporting Act doesn't require the bureaus to delete disputed items just because they can't prove they sent you a free report.
So it's not a guaranteed fix?
Not at all.
Yeah.
And in some cases, it can actually backfire.
Oh,
If the bureau can provide proof of compliance, they might flag your account as frivolous.
Meaning they'll be less likely to take your future disputes seriously.
Exactly.
Okay.
So while the 609 letter might have worked for some people in the past, it's not a strategy we recommend.
Okay, good to know. So if those magic bullet solutions aren't the answer, what are some practical tips for writing effective dispute letters?
Our sources actually offer some great advice from the credit repair pros.
Okay, let's hear it. Tip number 1.
Keep it concise and to the point. No need for long rambling stories. Just stick to the facts, clearly state your dispute, and avoid getting emotional.
Okay, keep it short and sweet. What's tip number 2?
Always include your personal identifiers,
Okay.
full legal name, address,
Yeah.
social security number, any other relevant identifying information.
So you're making it crystal clear who you are and what account you're disputing.
Exactly.
Tip number 3.
Hit me with it.
Provide supporting documentation whenever possible. Evidence is key. Right, like if you have proof of payment, a copy of a canceled check, anything that backs up your claim.
Exactly. Tip number 4.
Lay it on me.
Be respectful and professional in your tone. You're trying to work with a credit bureau, not against them.
So no angry rants or demanding language? Okay, what's next?
Follow up. If you don't get a response within 30 days, persistence is key.
Don't let them ignore you.
Right. And finally, consider using certified mail with return receipt requested.
So you have proof that they actually received your letter.
Exactly. These tips can make a real difference in your credit repair journey.
Great advice. I feel like we've covered so much ground already.
We have, but we're not done yet.
Bring on part 3. Welcome back for the final part of our credit repair deep dive.
We've covered a lot of ground, but we've saved some of the most powerful strategies for last.
Okay, I'm excited. Let's hear what's next on our credit repair journey.
Let's talk about a technique that credit repair professionals often use. It's called information saturation.
Information saturation? Okay. That sounds intense. What exactly is information saturation?
So it's basically overwhelming the credit bureaus with so much information that they're more likely to just delete the disputed items to get you off their backs.
So it's like burying them in paperwork until they give up.
Exactly.
Right.
One of our sources gives a great example. Let's say you're disputing a late payment on a credit card.
I think we've all been there at some point.
Right. Instead of just sending a simple dispute letter, you create this massive packet, include your letter copies of your ID bank statements showing on-time payments, anything and everything that supports your case.
So you're basically building an undeniable case that's impossible to ignore.
Exactly. And the key is to make it as thick and intimidating as possible.
So the credit bureau representative opens this giant envelope and thinks, nope, not dealing with this, deleted.
It might not work every time,
Right.
but it can be surprisingly effective, especially when you're dealing with those stubborn credit bureaus.
I can see how that would work.
Yeah.
What about the bank statement strategy? I saw that mentioned in one of the sources.
That's a specific type of information saturation that's really focused on proving you made your payments on time.
So instead of just saying, hey, I paid this bill, you're showing them the receipts.
Exactly. And the more receipts, the better the source suggests, including bank statements for at least 5 months, highlighting those on-time payments to the disputed creditor.
So you're creating a paper trail that's impossible to refute.
Exactly. It can be really effective for disputing late payments that were caused by errors on the lender's side, like with that mortgage client who got hit with a late payment because of a student loan servicer mistake.
Right. That was a frustrating one. It seems like this strategy could be a real game changer in situations like that.
Absolutely. Now, there's another technique that's often used with information saturation. It's called the urgent plea.
Urgent plea. Tell me more about that.
It's really simple. You just add a handwritten note to your dispute packet, emphasizing the urgency of your situation.
So this is a credit emergency. Please help. ASAP.
Exactly. One source even suggests using a red or orange pen to really make it stand out.
So there's no way the credit bureau representative can miss it.
Right. And it might not always speed up the process, but it can definitely grab their attention.
Now, I know we've focused a lot on removing negative entries, but what about building positive credit?
That's just as important. Deleting negative entries is great, but you also need to establish a strong, positive credit history.
So it's not just about removing the bad, it's about adding good stuff, too.
Exactly. The sources outline 8 essential steps for building excellent credit.
Okay, let's hear them. Step 1.
Establish at least 3 positive trade lines. These are accounts that show you're using credit responsibly, things like credit cards or loans that are paid on time.
So you're showing lenders that you can be trusted with credit.
Exactly. Step 2 is to consider a secured credit card if you're having trouble getting approved for a traditional card.
Secured cards are a great way to start building credit, right?
Yeah, they're a good option for people who are new to credit or who are rebuilding their credit history.
Okay, what's step 3?
Avoid subprime auto loans at all costs. The interest rates are sky high, and they can really trap you in a cycle of debt.
Yeah, I've heard horror stories about those. Okay, step 4.
Never, ever co-sign for anyone, no matter how much they beg you.
Oh, yeah.
Their financial problems could become your problems, dragging down your credit score.
That's so true. I've seen friendships ruined over co-signing. All right. Step 5.
Keep your credit card balances low, ideally below 30% of your credit limit.
The classic 30% rule. What's next?
Pay your balances in full every month. This helps you avoid interest charges and shows lenders you're responsible with your money.
Solid advice. Step 7.
Be mindful of credit inquiries. Every time you apply for credit, it can temporarily lower your score. So be strategic about when and where you apply.
So don't apply for every credit card offer that comes in the mail.
Exactly. And finally, step 8 is to maintain insurance and an emergency fund.
Okay.
This helps you avoid relying on credit cards when unexpected expenses come up.
Okay, those are 8 really solid steps for building and maintaining great credit.
They are, and remember, credit repair and credit building are ongoing processes.
Yeah.
They take time, effort, and a bit of know-how, but you can absolutely achieve your credit goals.
This has been such an insightful deep dive. I feel like I've learned so much about credit repair, and I'm really starting to see it as a journey, not just a destination.
That's a great way to look at it.
Yeah.
It takes time and effort and a willingness to keep learning, but you can absolutely achieve your credit goals.
I love that positive message. So what's the most important takeaway you'd want our listeners to remember from all of this?
You have the power to take control of your credit health. Don't be afraid to advocate for yourself, dispute errors, and build those positive credit habits.
It's all about taking those steps to build the financial future you deserve.
Exactly. And remember, there's always more to learn. Keep researching, keep asking questions, and keep diving deep.
Awesome advice. Thanks for joining us on this credit repair adventure.
It's been a pleasure. Until next time, keep learning and stay empowered.